Good morning, everybody. It is just almost coming on 4 a.m. Tuesday, March 26th, and I'll try and keep it quick because there's not really much to go over other than the highlights of where we've come from and where we're at. Today is a very quiet day as far as news goes. 8:30 it starts, durable goods, down to 10 o'clock for consumer confidence, semi-important to consumer confidence. 1 o'clock, we have the 5-year auction, and that is it. That's it really for today. That's it. There's nothing else out there. And I will bring to your attention yesterday and how really, because of NVIDIA, not really Micron, but because of NVIDIA, we avoided lower than what we actually got yesterday. Yesterday, the S&P never filled the gap. Dow never filled the gap. The NASDAQ did fill the gap. And as you saw there at the end of the day, we had that nice retracement. The Russell 2000 gapped up and never filled its gap down below. So again, a very mishigosh kind of Monday, but hey, it pays. Quickly here on the range and why I want to be really tight about this. 21st, Thursday, 20 points, the day after the FOMC. Big gap up, 28 points. We filled that gap. 16-point range on Friday. You just had a 13-point range yesterday. So this is pretty boring, but at the same time, it's paying off very well. We've had 3 back-to-back better than $3 credits on the credit spreads, 150% on your return on that, $2 at risk, $3 credit, full credit end of the day, 52.18s, 52.25s paid, 52.34, the 52.40 paid, 52.41, the 52.50 paid. Having gone over that, we hit these century marks, this 5,100, we pull back. We hit 4,900, we pull back. We hit 4,800, we pull back. We're 3 days now, 4 closes, 3 days in the 5,200s without a 5,100 visit. Today being Tuesday, today is the day that I would strongly suspect that we are going to be seeing 5,100s and we will be testing that 5,175. Here we are looking at that 5,175, supported extremely well, resisted extremely well prior to the FOMC meeting. FOMC meeting came out, kaboom, you got what you got. Here we are on a 3-day progress now, Thursday, Friday, and yesterday, fractionally trying to just get a little bit close to that minus 1% line. Closed right on the 5-day moving average. And if we do get a little shake, rattle, and roll overnight here with the European markets now open, we could get an opportunity where we open up below that 5-day moving average and the algorithms use it for resistance and we start to move and pressure fractionally onto that 10-day moving average, considering you got 2 nuclear powers, one ready to make revenge for what happened over the weekend. The other one going against the United Nations Security Council suggestions, agreement, law, bill, whatever it is, to not go into Rafah. Lots on the table here as we're going in here to April. So anyway, here, 3-day dip. It would be nice to see a pressure onto 52.0849, minus 1% from the recent all-time high place just last week. But we should see something to push down onto that 51.75, 51.80. That's why over in the alert room, over on the spreads, I gave, again, what I am looking at as an extremely risky trade that could really pay off quite well. That being buying the 52.05 calls, selling the 5,200 calls. It's a $4 credit, $1 at risk. We've got 4 closes in the 5,200s, 3 20-point or less trading sessions, and today's Taco Tuesday. Go over onto the QQQ, and QQQ filled the gap and filled the gap, filled both gaps yesterday. Still hovering here in this 446, 444 with a really tight range yesterday. But we do have this fake print that came out after the close on Friday down here at 441. 100% expect that we're going to be seeing that 441, if not today, early part of tomorrow. Over onto the IWM, and the IWM, right back up to that 207.21, failed right off of it, closed on the lows of the day, did not completely fill the gap going back to Friday. And here we are floating up here in the middle of nowhere in the 206s, which again, IWM 203.69, that's your breaking point. And I notice now that I am going to have to cover a couple of things because they are not on the screens that I have right here. DWAC. Many of you remember DWAC. DWAC, when it first came out, as it was a sitting there SPAC, nothing to do with it, Digital World Acquisition Corp. It's a SPAC. They announced here back in October of 2021, they are going to be joining up with Rumble. They are going to team up with Donald Trump, and the stock went absolutely nuts, 175. It's never done anything since then. Today, that ticker symbol changes. Ticker symbol changes over from DWAC to DJT. Perfect. Now, very few of you remember, the week before Donald Trump actually submitted his documents that he was going to be running for president in 2016, his prior publicly listed company, Donald Trump something, I completely forget what it is, filed bankruptcy and delisted off of the OTC market. So DWAC, you want to play around with it and own the stock, obviously being a Trump supporter or whatever it may be. 38 yesterday, up to 54 intraday as a stock. As a option trade, where are we? Because I'm having some video card problems. DWAC from an option, no options. So, okay, forget about that. I had noticed before that, oh yeah, that's right. You're not going to have any options because they've already changed it. And we should see now DJT. Do we? We don't. Trump Hotel, Casino, and Resorts is the old DJT. They have not changed the ticker symbol yet. They will be changing it later on today. So anyway, DWAC is going to be DJT. It's Donald Trump. For you all with the JP Morgan that are sticking with this, very nice move. Very nice move on JP Morgan. Broke that 193.70 there on Thursday morning. Boom, here we are hanging, or Wednesday morning, sorry. Here we are pushing down onto that 193.71. Bigger, broader picture. I've not moved off of it in any way, shape, or form. I am expecting fully a revisit of that 186.41. That was the purpose for me picking the strike that I took and sticking with it after I stayed in it. I alerted out there that the 195s for next week were trading. We did this last week. They were trading at $1.18. They're at $2.75 yesterday. So JP Morgan, get to know it, know everything about it, because it is going to be an earnings play coming up here in a couple of weeks. Federal Express. Mentioned this in the room yesterday, and I like it more the more I look at it. Federal Express being, they reported their earnings last week. Their gap to fill from their earnings, if I correct it, am I right? Am I wrong? 262. I'm wrong. 262. Some reason I had it as 255. 262 is the gap to be filled. So in any case, that is your gap from earnings, 262. You came down into the gap fractionally yesterday morning. The strike that we're looking at is the April 5, 275 puts. Literally right here. They closed at $1.18 yesterday. And again, with the gap fill at 262, pressure onto that 258. More importantly, look at this from a wide point of view and see where your 255 is, why it matters. You don't need a large number of these contracts. We get a move down into that 262 gap fill. We get that pressure on that 255. These are worth $20. So That's the reason for Federal Express. And anyway, guys, I am going to have no choice but to reboot. I am having video card issues. I'm seeing them. I'm starting to notice it over the past couple of weeks. I'm going to give it a reboot. I'll get the email out, and I'll see you guys when the market opens up.